Hello, this is Martin here from seekedge, the channel for learning about trading and investing. Welcome to the weekly technical analysis for the July 5th, 2021, where we look forward to see what is the week ahead in the markets. Let's get into the analysis. So what happened last week? What was the price action, the patterns that we can see? There was a false breakout on the weekly bearish candle. You can clearly see that there is a false breakout that happened. It went up to 915 and then fall back. Same can be seen, it did an up move and then came back. So this is seen in Nifty as well as in the Bank Nifty. So both the indices are showing that, right, the market, the price is trending down. The entire week it was trending down, right? If you look at the 1 hour chart, you can clearly see that the 20, right, it was trending down, and the 20 DMS was a support where it was, it was there. The Nifty, if you see, that is also broken. Bank Nifty earlier broke that. So both the indices lost the 20 DMS support. It's trending down. It just did a false breakout in the weekly basis, and it is bearish. So Nifty weekly bearish candle, if you see, it has got a open is got a high pattern. That's very bearish, right? It's a very strong selling pattern, you can see. So if you look back, since the June ended and we are in the new month, if you look back at the June month, it shows that spinning top on the monthly candle is spinning top. It's a small body candle, which is not good because it's on the top. It's on the top of a rally, which normally is dangerous if it works out. So Nifty and the Bank Nifty is seem to take and support at the previous single lows, right? Around 35, 800, 600, that level for Bank Nifty, and 15, 600 nearby levels for the Nifty. They are at good supports currently. So the latest Nifty candle, if you see, it's a hammer, which is slightly bullish. That means that it may not go, it may not indicate a bearishness on a daily candle I'm talking about. So the Bank Nifty has a spinning top. Again, spinning top is not really good, but it depends on where the spinning top is appearing, the top of the rally or middle of the rally, sideways zone or down zone. So on the top it's very dangerous. So Bank Nifty has a spinning candle on the daily, right? And the June month, if you see, it has a bearish. The entire month, if you see, Bank Nifty has got a bearish candle. Nifty on the monthly basis, June month candle, if you see, it's still green, even though it's a spinning top, small body candle, it's still green, but Bank Nifty's case, it's not green, it's bearish candle on a monthly basis. On longer term also, it's not green yet. Green for the last June month. So June was very bad, was really bearish for Bank Nifty, is clear. Now Nifty and the Bank Nifty, both, you can see that the Bollinger Bands, skews has happened, so it has gone to a very narrow range. Both of them, Nifty was not having that, but now Nifty and Bank Nifty both are showing clear volatility, contraction and consolidation. So this is a wrap up what we can see from the price action as well as the candlestick patterns and the Bollinger Bands. Let's see at the charts, screenshots of the charts. If you look at the Bank of Nifty on the left side and the Bank Nifty on the right side, you see this is so this is the daily candles. The daily candle is showing a hammer on the Nifty on the left side and a spinning top right side, right? Spinning top is not on the top of the rally, so it's okay, but the hammer is on the downtrend, so there is a possibility that it could recover and then move up. That's what the daily short-term basis is what the charts indicate, the candlestick patterns. So here you have open is equal to high. It's very bearish on a weekly basis on the Nifty left side. On the right side also, it's a wide range bearish candle, which is clear indication that the week was very bearish. Bollinger Bands, both of them, you can clearly see that it is consolidating, right? It is coming into a narrow range of price movement, right? So how long this narrow range is going to continue, we are not sure. So now let's look at the support and the resistance levels. This is very critical for option and derivative traders and positional traders also. So these support resistances, we can clearly see the Nifty is having a support at 600, 650, 600, 650 levels, and after that you have the 500 levels, which is a support, and the third support is at 15,050 levels. while the resistance for the Nifty is in 850-900 levels, and then after that you have the rounding number 16,000 levels. So this is where the not much major differences in the support levels has happened the last week. Bank Nifty, if you see, you can see that 35,000 nearby is the major support zone. If it breaks down from the current levels, it's at that current level, support level, if you see. Now after that it has a support level at 34,000 kind of levels, 33,900 or 34,300. That band is where it has got the support, and after that it is long way back down to 33,500 kind of levels. So these are confluences of support. So if you look at Bank Nifty, it's a 523 plus previous swing low plus PR, previous resistance. A combination of all this is what making the first support where it is currently there. Similarly, the resistance, if you see, the previous resistances are all there to be captured. 35,300 was the first immediate resistance. After that, you have 35,800 just to be broken, and after that it is 36,500, and after that it's all-time high. Level has to be broken. So there are a lot of resistances upwards in the Bank Nifty, and currently at a major support zone is where Bank Nifty is. That's what you can clearly make out from the support resistances. So this is what the same information that we talked about is seen in the charts. You can see that there is a resistance zone band, right, at 15,900 levels. Then 16 below that you have a support zone at 15,600 levels, and below that you have a support zone at 15,400, 50,300 kind of levels. And after that you have 15. It's a 50 Fibonacci support, which is seen as 15,000 levels. That's below that it will be it will be a crash, you can say. It won't be any more a correction. It will be a real down move that will be happening. So there are multiple supports, you can see that in the charts. Bank Nifty also similarly, it is at a major support level of 34,800 levels. It is currently resting on that. The spinning top is resting on the support zone, and top you have supports bands that you can see where previous resistances happened before, and on top of that you can see all-time high levels at 37 level and 36,500 level also you have resistances, right? Supports, previous supports downward, if you see 38 Fibonacci levels also you have support at 34,000 kind of levels. So this is what Bank Nifty support resistance levels are. Now let's look at the momentum and the trend. So the RSI momentum actually has fallen off into the side. It was bullish till last week. This week the Nifty has fallen into sideways and joined the Bank Nifty, right? So the medium and the long term continues to be in the bullish zones for the Nifty, right? So Nifty had some bullish positive reverse divergence, both of which failed, right? Didn't work out. So the Bank Nifty momentum is already in the sideways zone, but it is bent up slightly on the daily. Weekly momentum also is slightly slipping into the sideways zone. So the monthly is still in the bullish zone, so you can say. So there is a bearish monthly momentum divergence that was seen from the Fed month onwards, and it seems to be what has worked out in the June and then pushed the market down. Right? We had in the earlier analysis we had shown that there is a bearish momentum on monthly basis. So that entire month the down move could be because of that bearish momentum divergence, right? And ADX indicator, which indicates the trend of the indices, says that it is Nifty is still in the bearish zones. The trend is bearish, and Bank Nifty had shown some bullishness last week, but it again crossed over back to the bearish zones again. So both are the bearish zones from the trend perspective, and both are in the sideways from the momentum perspective. You can see the same information that we talked about. You can see that the momentum is in the sideways, on both indices. Here you can see that this is on the left side of Nifty is in the bearish zones, and then there is a bend on the strength, and then Bank Nifty on the right side is also crossed over to the bearish zone after a small crossover to the bullish zones the last week, right? Now open interest analysis and Wall Street is what we are going to look at last. So the chart study is complete. So open interest is related to the derivatives trading, right? So indexes are traded on the derivatives, right? So open interest data is showing short covering on the future contract, which indicates that the shorts are, whoever has gone on the shorts may turn and then go long. So it's slightly bullish, you can say. So open interest data is showing that. So levels for the open interest data, support and resistance levels are showing that 15800 is the highest call rating where the resistance is seen. After that 16,000 the highest resistance. Similarly downside 15600 and 15500 is where the highest put rating is there. On the bank nifty it is 35,000 where the highest call rating is there, and that's where the resistance is going to be. 34,500 is what the put side support levels that we can look for. Below, beyond that it is 34,000. You can also see that the put call ratio of the Nifty is fallen down to 0.8 and joined at the same level as that of Bank Nifty of 0. Near to 0.8 levels, which is not bullish enough. Neither it is too bearish also, right? So it's in the sideways is what put call ratio is indicating. India VIX has fallen again for the 10% last week. Previous week also it had fallen more than 10%. So it has come down close to the historic 12.1 levels, which is not good for option buyers and sellers both. So the IV, you can see that it is 11.5, which is above the IVP, which is above the. So the IV is above that. So yeah, it's more or less IV is slightly above. We can say 12, slightly above. So, but still not favoring the sellers in any way because the IVP is hardly anything. So it's a very low, a rare, very low volatility regime that we are going through. That's what the OI analysis and the volatility details. The India VIX has fallen to very low level is the major highlight of last week, right? And OI analysis is showing in line with what the charts are saying, right? With 15,600 as the support and 15,800 as the resistance on the Nifty. Similarly, 34,000 and 35,000 would be the levels for the Bank Nifty. Now sectors for the last week, if you see IT sector continues to be bullish, although there are some small corrections that has happened, right? The momentum is very good, and the last week ended with a daily logic candle, which is with some kind of correction, but it's very much bullish. IT it will continue to do that as long as the US dollar keeps on rising fundamental basis. FMCG is bullish, and there is a bullish momentum divergence which is set to work in progress, and then therefore FMCG is very bullish. As so, IT and FMCG can is where the action is going to happen. If at all the market is going to move up, if at all FIs are going to put in money. So metal is in sideways. Auto sector also is continue to be sideways. You just have to wait for the momentum to pick up on both of this, metal and auto. Pharma is bullish. It was in the sideways. It has turned bullish. So we have the third sector which is bullish: pharma, FMCG, and IT sector. All three are bullish. Now let's look at the foreign institutional investors and the domestic institutional participation for last week. If you see, we can see that the FIS sold 5,000 crores last week in cash market and did no buying, almost not, very negligible buy that has happened. Net to net, if you see in the June month, very little. So thanks to the DAI, domestic institutions like mutual funds and other domestic institutions, what they have done, 12 days they have continuously been buying, and that is the only reason why market has not crashed. Now 7,000 crores alone buying has happened in the June month, right? Even the derivative also, Nifty, the FIDA participation has dipped. If you see that, so that is a we cannot say whether it's good that DIs are buying, but it's not too worrisome why FIs are selling so much. So global markets, if you see US markets, all Nasdaq, S&P, and Dow Jones all are turned bullish after the Fed event 2 weeks back, right? So dollar is strengthening, dollar is risen up to 92 above levels. USD INR pair trading in the NSE also has improved, has almost hit to 75 levels, right? It was at a resistance zone, it was broken out, but you can see the last daily is a gravestone, which is saying that there is some intervention and there is some selling pressure from the top that is happening, because it's 75 is a very high level. The rupee has weakened so much, so there would be intervention from the RBI, and so further up move may be slow, but it is broken out from the resistance of the previous level. Now gold, if you see, you can see that the hammer on the weekly which is bullish. Gold was taken, had taken support at a very previous, so very major support zone, and it was hovering around that. And last weekend, we could see that the gold has started moving up. 2-3 green candles are seen, and this is the right time to enter before it's too late, right? Before it hits another top resistance area. So it's long. So market may continue to slowly move up in case of gold, right? So it has already started there. It was consolidating. It has started moving up. US dollar also was consolidating, then broke out, was resisting at the support zone and the resistance was broken out. So both are broken out, gold and USD INR. So actionable, if you see, the India VIX has fallen to the 12 levels is very peculiar situation. It's not good for the option buyers and sellers. But since it has fallen so much, there is a likelihood that since volatility is always mean reward, is likelihood that it will move up, spike up. So in order to benefit from that, it may be an actionable for the next week would be to take Vega positive trades, but still hedged so that we are not prone to the sudden movements, right? So non-directional strategies with Vega positive strategies will be a good actionable for the next week. This is an example for a double diagonal calendar spread. You can see where you have hedge positions for the upcoming week, and for the current week we'll have the shorting that is done, right? So whenever the spike up in the Vega happens, it would benefit benefit on the hedge positions, and then we could come out with good profit levels, right? So the wrap up is that market is at a narrow range bound phase, right? And there is uncertainty of how long this consolidation will continue in this narrow range. Whether which side also is another concern. It will go up, it will break out from the consolidation upwards or downwards, right? Therefore, there has to be some caution that has to be maintained. Now, India VIX is at a very low volatile level, and option traders and buyers and sellers all in dilemma, right? So non-directional traders can be thought of, so that a sudden spike upwards does not throw you out. Right, non-directional with Vega positive as we discussed in the actionable section. Right, so that's a wrap up on what is market is range bound and into a skews consolidation phase, very narrow range bound, and VIX is at very low, so anything can happen on either side. So momentum is sideways, trend is bearish, right? In a very short term, if you look at, so the bias is definitely negative. So again another reason for being being cautious, right? So positional traders need not worry until the support zones are broken. Up till 15,000 there is no issue. 15,500 caution number 2, right? 15,000 broken, there is a worry. Till then there is nothing much to it. That's a wrap up of this week. Once again, request you to kindly subscribe if you are not subscribed. Hit the like button if you like it, and also share with your friends and family, so because it's very important for us to keep motivated to come out with videos in the future. Happy trading and happy learning. Thank you.